Teeing up some winners in banking on their success. Many traders are turning to perceived value as they hope to weather the year. With lowered valuations, that might make picks from big banks to small caps more tempting than others. Here with more is Jonathan Boyar, president of Boyar Research and host of The World According to Boyar. Jonathan, good to see you as always here. Make the thesis. Walk us through your thesis on value stocks and why is now a good time.
Well, first, thank you for having me. Yeah, no, I think it's always a good time to invest in stocks that are selling below within their worth, but now is a particularly good time, especially with the implosion in some of the mega cap tech names. We're finding a lot of value, especially in the small cap space. We just came out with our annual Forgotten 40 report, which is our 40 best ideas for the year ahead, and about 40% of the Forgotten 40 are in small cap names. I think it's the cheapest area of the market.
So when you look at the Forgotten 40, what are some of the main criteria that you look at to figure out what to put in there?
Yeah, they're not our cheapest names. Mm-hmm. There are names that have shorter term catalysts. We're normally very long-term patient investors, but we're looking for what will do the best in the year ahead. And that's what the Forgotten 40 focuses on. And we think in 2023, small caps are the place to be, as well as banks and some other names.
So what are the catalysts? You said that they'll have catalysts this year. Is it sort of company-specific catalysts in each of those instances, or are there some big macro catalysts that you're looking at?
Yeah, definitely company-specific in the most cases, whether they can spin out a division, whether they can be taken over. It's definitely a name-by-name thesis.
Jonathan, if we're nearing a recession, why do you like banks and notably Bank of America?
Yeah, well, Bank of America is a very different bank than it was in the last recession in 2008. Brian Moynihan, Jamie Dimon gets all the credit, but I think Brian Moynihan's one of the best bank CEOs out there. It has great credit quality. It's extremely sensitive to a rise in interest rates, as you see in their net interest income. And I think, last year this was a $50 stock. A recession, I think, has been more than reflected in the decline in the price.
That one is definitely not a small cap, though, obviously.
Yes.
Is this the only bank that that's in the Forgotten 40 at this point?
We have another smaller cap bank, Citizens, in there as well. But I think if I was to choose one major bank, it would be Bank of America. It's just extremely well run. It's going to benefit from a rise in interest rates, as I mentioned earlier. It's also done a terrific job in expense reduction. So there's a lot of good catalysts coming for it.
Jonathan, do you view tech stocks as forgotten stocks at this moment?
I think that's a case-by-case basis. There are a lot of tech stocks that are down 70-80% from their highs that are never coming back. And there are other stocks that are down significantly that will that will improve it. This is definitely a stock picking type of environment, and what worked well over the past 10 years is probably not going to work well over the next in the medium to long term.
One of the other stocks you like, by the way, I believe is Topgolf, right? Callaway
Yes.
Topgolf. What's the catalyst in that particular case? Because we've already seen for many of these sort of so-called reopening plays, right? There's already been some enthusiasm. What does 2023 hold?
Yeah, Topgolf is an extremely interesting story. This is the company formerly known as Callaway.
I have to say, I was thrown off when I saw MODG because I didn't realize that was the new ticker.
Yeah, they changed it. It used to be Eli,
Right.
to reflect the founder, and now they've embraced the modern golf concept. And this is essentially an entertainment company. By 2023, I think about 50% of EBITDA will be from Topgolf, so it should garner a higher multiple. The Topgolf business is on fire. The CEO, Chip Brewer, who has done a fantastic job, is buying shares, as is the CFO. So there's a lot to like there. And this is a stock that was in the high 30s and now is in the low 20s. And we think is selling a significant discount to private market value.
Sozzi is a big Topgolf guy.
Good. I hope you go more.
I am, Jonathan. I really do enjoy going there, and because I do go, I can tell you it is quite expensive. And if the economy is slowing down, people are getting fired. I mean, you have to think a $200 night out at Topgolf is the first thing to get cut, no?
That certainly is possible. I mean, if we go into a deep recession, this is a stock that will won't do as well. But if you think you'll have a mild to moderate recession, I think the bad news is more than priced in.
Jonathan, good to see you. Thanks for coming in. Jonathan Boyar of Boyar Research and host of The World According to Boyar. Thanks so much. Appreciate it.